welcome to Looking at the Markets with David Modell. Sometimes people ask me, which stocks should I buy? Maybe they come to me with a stock that they found on a stock screener, or that a coworker or friend recommended to them, or maybe they found it in a newsletter or on a message board somewhere or in a chat room. And maybe it's a small company, a new company, a startup, and they're thinking maybe they should invest in that. Maybe they want to buy the stock. Well, I'm going to tell you some reasons not to buy these tiny, small companies that people or newsletters or stock screeners recommend to you. So let's take a look at some research here. This is an article from Forbes magazine, and they're quoting Bloomberg, and it says 8 out of 10 entrepreneurs who start businesses fail within the first 18 months. A whopping 80% crash and burn. So what they're saying is that 80% of new businesses fail very quickly within the first 18 months. And I'm sure that within the first, let's say, 2 years or 5 years, probably the percentage grows even greater from there. So that's not very encouraging if you're thinking about buying a stock for a small company or a new company, a company that's just growing. Personally, I would avoid investing your hard-earned money in these types of companies. And I'll show you some examples. And I collected some small companies, small caps, penny stocks here. And you can see the charts. This is from Google Finance. The first one is ticker NEPH. This is a penny stock. And we can see from the chart it has just gone down, down, down. And according to the chart, it has lost 87% of its value. That's not too good. And here's another small company, penny stock, MNKD. And again, you can see the chart has lost almost all of its value. And it has gone down 93.5%. That's not good. Here's another one, another small company, penny stock, ticker SKLN. Look at the direction of a chart. Sure, it had some up moves in there, some pops in there, but overall, down, down, and down. And this stock on the chart has lost almost 98% of its value. Another penny stock here, ticker TRKK. Again, it had some up moves here, but overall it has lost almost all of its value. 99.81% of its value has been lost on this chart. Not good. And here's ticker GBSN. I consider this a penny stock because it's under $5 in value. And from here to here, it has lost, it actually says on the chart, it has lost 100% of its value. Maybe it hasn't lost 100% because then it would be at zero, but it has lost almost all of its value. And these are small cap companies. I recommend purchasing mega cap companies, big companies that have been around for a while, for years and years, or even decades. Companies that are very profitable, companies that are household names, and these companies are less likely to lose, much less likely to lose almost all of their value. Okay, they might, in a bad economy, they might go down, 10% or even 20%. During the Great Recession, a lot of companies lost 50% or more, but then they came back up eventually. And these are during the worst of times. During a bull market, these companies usually don't go down 90% or 98% or 99%. That's very rare. And so you're usually pretty safe buying really well-known, highly profitable mega cap companies. And these are the kinds of companies that I prefer to buy stock in if I'm going to buy stock. So if you'd like some help picking stocks, choosing stocks that are right for you, and if you'd like help putting together a trading plan, you can send me an email anytime. My email address is davidmodell@gmail.com. If you like this video, please give it a thumbs up on YouTube and leave a comment because I like to read your comments. They're very helpful to me. Also, subscribe to my channel. That way you can receive the latest updates on my educational financial videos. I hope this was helpful, and I hope to hear from you soon. Thanks a lot.